Our first segment of the day is a great one, is the Bitcoin macroeconomic landscape. And I'd like to introduce our panelists. First, His Holiness, Mr. Mark Moss. And next, Mr. Jeff Ross. And we're sticking with the Jeffs with Mr. Jeff Booth. And Mr. Preston Pysh. And your moderator for the panel, Mr. Trey Lockerbie, ladies and gentlemen.
All right. Good to be back, Miami. How we doing? How we doing? I know it's early, but how we doing?
Yeah.
All right. I'm trying to get you ready because we got some heat to bring for you this morning, all right? And I don't think this room in particular has had an event this electric since about 1964 when a young 22-year-old man named Cassius Clay, later to become Muhammad Ali, was up against the heavyweight champ at the time, Sonny Liston. And Cassius said he's going to float like a butterfly, sting like a bee, and knock Sonny out in the 8th round. And what happened? He knocked him out in the 7th round. And I'm honored to be on this stage with, I think, the biggest heavyweights in the Bitcoin space. And I'm excited to get this started. Are you guys ready? All right. So we're going to start with a little bit of micro and then work our way up. So I'm going to start here with Dr. Jeff. And we're going to talk a little bit about the recent price action of Bitcoin. Bitcoin has been trading with a 0.9 correlation with the NASDAQ recently. And I'm wondering, why do you think Bitcoin is trading like a tech stock? And what needs to happen for it to decouple?
Yeah, that's an important question. So I guess what I would say is that, we have 25,000 people or more at this conference. That's fantastic. But we do not yet make the market for Bitcoin, right? So we understand that Bitcoin is the world's best safe haven asset. It's so much better as a safe haven asset than the US dollar, but the majority of market participants still don't believe that, right? They still think when they get scared, when the economy is tanking, they sell all of their risk assets, their risk-on assets, and they move to cash. So over time, we as Bitcoiners understand that Bitcoin truly is the safe haven asset that we should be flocking to. Now, if I can digress just slightly, I'm very bearish on the US economy right now, you guys. Things stink out there right now. The economy peaked in Q4 of 2021, and we are decelerating. Inflation is really miserably high, but I also think that it's close to peaking right now, and we start to decelerate. When you get that combination of factors, that is terrible for risk-on assets. We are getting closer and closer to a recession. The Federal Reserve, for their part, they caused all this, but now they're trying to slow the economy down. They want to see a major slowdown. They want to see things slow down because they're trying to tame inflation. So expect to see things like equities, like real estate, like even commodities, which had spiked so high, oil, lumber, whatever, you name it. They're coming down now. We're going to see repricing in lots of these asset classes, and it's going to be a tough year. So Bitcoin, getting back to the original question, is highly correlated right now with the NASDAQ. It has about a 90% correlation, meaning that if the NASDAQ moves up, Bitcoin moves up. If NASDAQ moves down, Bitcoin moves down. It won't always be the case, but it is for now. So I would caution people to get mentally ready for what could happen. If you are a long-term investor in Bitcoin, and I truly hope 99% of you are, don't trade Bitcoin. Bitcoin is not for trading. It is the world's ultimate savings technology. It's meant for savings. So think of it like you think your bank account. You don't trade your checking account, right? Thank you. And I mean this sincerely. People ask me all the time my price predictions. It does not matter what the short-term price predictions of Bitcoin are. Quit checking your phone. Treat it like it's your savings account, right? You don't trade your savings account. So think of it that way. We are going to have an awesome year of stacking sats. We're going to get more sats for the US dollar or whatever garbage government fiat currency you have. Take advantage of it this year, because in 2, 3, 5, 10 years from now, you are going to be absolutely ecstatic that you did that. It's going to be awesome for you and for your family and for future generations. And I'll stop there.
All right. Sticking on price action a little bit, we're going to move over to bonds. So Preston, the yield curve recently inverted due to massive sell-offs in bonds. What is happening with the bonds today?
So this is my favorite topic. At a basic level, when you're performing economic calculation, you always start with what's your inflation rate, and you construct everything above that, because that's where your risk-free rates are constructed as a premium above that, and then your equity premiums are a premium above those fixed income rates. And so when you think about like the hallmark and the keystone of economic calculation, it's what's the inflation print. And I think if you have people that are looking at it from a recency bias, they know the global events that are happening with Ukraine and Russia, and they're saying, oh, well, that's the reason why we've got an 8% and maybe higher inflation print. But the fact of the matter is we've had over 5% inflation for a year leading up to those events. And what's causing that? Well, the thing that's causing it is a breakdown in supply chains. And so when you go from an environment where you had inflation prints at 2% or less, and all your fixed income bonds were getting priced at a 1% premium or a 0.5% premium above that inflation rate of 2%, you can see why we're in for just an incredible shock to the global economy when you have an inflation print of 8% and all these fixed income yields are still down at 2 for a negative 6%, probably higher than that. I can only imagine what the next CPI print's going to be. And so when you're re-engineering all that financial valuation for everything on the planet, I mean everything, we're talking hundreds of trillions of dollars, you have the biggest negative spread that anybody in this room has ever seen in their lifetimes. And they need to treat that with a whole lot of caution and thought, because boy, oh boy, when you adjust discount rates like that, the prices on everything are going to go like that. And so what does that lead to? That leads to further printing, further manipulation. Central banks have to step in. They're going to have to hold back that sell-off in fixed income as those yields are blowing out in a sell-off. And that's just, boy, oh boy, from my vantage point as I'm looking at the macro landscape, I mean, that's the story of stories. That's the elephant in the room, is this negative spread is just unprecedented.
All right, and persevering. And that's just the CPI. That's not...
Yeah, exactly. That's the CPI they're telling you.
That's the CPI they're telling us. All right, Mark Moss, talk to us about the 3 macro cycles in play and how they are converging.
Yeah, that's something I've spent a lot of time thinking about. You know, we tend to look for financial indicators, and we're looking at indicators to try to kind of guess where things are going in the future. The problem with indicators is there's no one indicator that's conclusive, and so we're looking for multiple indicators that can tell us different things. And really, in the stage that we're at right now, in this global stage, we need to look at indicators across a spectrum. And so we can look at just financial indicators, but there's other things at play. So for example, there's the political, social, cultural things that we're looking at. And so there's cycles that happen really on about a 250-year time frame. We see that we go from like a centralization to a decentralization cycle. We get too much government overreach, too much centralization, and then people push back. They reject that. And then on a different time frame, we have this 80-year financial cycle, this financial revolution cycle, which we're kind of talking about. We're at the end of this long-term debt cycle. And so about every 80 years, we see this, and then the government prints too much money, inflation runs too hot, people don't want to hold the money, they want to rush back to a commodity type of money. And so that's what we're starting to see exactly right now. But the biggest driver, the thing that changes humanity, changes history through thousands and thousands of years, is always technology. And this is the big piece that a lot of people miss. So some of the people that I look up to, like Ray Dalio, for example, that's charted this long-term debt cycle. He's just recently wrote a new book that's great. Everyone should read it. The research is amazing. But he's missing, I think, one of the biggest ingredients, which is the technology itself. And technological revolutions happen on approximately a 50-year time frame. And so what's interesting, if we look at political 250 years, financial 80 years, technology 50 years, we have all three of those converging right now at the exact same time. And so while we want to look at these systems, we want to look at these financial revolutions or this financial reset that we're going through. That's what they're calling for, this financial reset. We can't just look at that alone. We have to look at the technology, which of course is why we're all here. We're witnessing a technological revolution, a decentralized revolution. Of course, Bitcoin is doing that. And so while we have all these problems with the bond markets, and we'll get into some other things about how the world can kind of move forward in this globalist system, we can't ignore the technology. We have to look at Bitcoin. And so while we're bearish on the economy, like Dr. Jeff Ross says, and I agree with that, and obviously Preston highlighted very well the problems we have with the bond market, we also have to look at that we do have this new technology, and that's going to start changing things at the same time. And what a time to be alive.
Mm-hmm. Mark, you mentioned Ray Dalio's book, so I want to stick on that for a minute. In the book, there's this archetypal bell curve of the rise and fall of a superpower, and there's 18 different steps involved as he's mapped out. Number 14 is money printing. Number 15 is internal conflict. And so, Jeff, I want to talk to you about internal conflict. Right now, there's a wealth gap where 0.1% of the country here in the US has as much wealth as the bottom 90%. And internal conflict most commonly revolves around wealth gaps. So my question for you is, what would be the best step to avoid an internal conflict like that arising?
Well, the simple answer is this. Everybody's in the room for the same thing. A transitionary system away from the system we live in. And we measure everything from the system we live in, so it's hard to see what's happening from that system that is bound to get worse. If you backtrack what it looked like 20 years ago when everything felt okay at 2% inflation, then things started to happen at an increasing rate, and now you start to look around the world and you wonder, what the hell is going on? And the system has to do this. And I think this is one of the things Ray Dalio misses. These long-term debt cycles, and I'll just add to what Mark was saying, technology has always been the driver. Technology has always been the driver, but we had hard money based on gold. And then on hard money based on gold, you had to build a credit-based system on top to drive velocity of money. And that credit-based system on top, driving velocity of money, is subject to whims of us, human beings, greed and arrogance and thinking we can outrun the free market. And when you do that, you turn into these long-term debt cycles because you have to keep growing or you have a credit collapse. And that keep growing turns into growth by manipulation. And that's what's happening today. And so a feature of the system is a transfer of wealth from the middle class and poor to the rich, because it's based on inflation, which is really just a transfer of wealth. It's not the free market working. The free market is deflationary. The free market has always been run by technology, and it's deflationary. And why these long-term debt cycles, if you go back to the Roman times, they reset every 600 years, is because technology wasn't moving as fast. And now technology is moving, and then you reset these every 200 years, then you reset them every 100 years, now you're resetting them every 50 years. Remember, the US dollar failed in 1971, and then you created the petrodollar system, and it's failing again right now. Because the entire system is based on trust, and when you abuse trust, it destroys, and it pits people against each other all over the world, and we miss what caused it all. This is one of the things that Ray Dalio misses, and many people even in the Bitcoin space miss too. Because they're looking backwards at what used to happen on these long-term debt cycles, they're missing what's happening with technology. The technology of Bitcoin allows you to build a system peer-to-peer that doesn't require debt for velocity of money. And what I just said is probably the most important thing about Bitcoin, because you don't have to trust human beings and centralization that will always, because our human nature demands it. We wouldn't vote for somebody who said, hey, tomorrow we're going to make the whole thing collapse. Because if the US government doesn't come in with yield curve control and massive printing, everything resets to zero all over the world. And the only money, you think the money in your bank is safe? It's not safe too, because that resets too. The only money that is actually valuable is the stuff under your mattress. And I'm sure nobody in this room wants that to happen. And so what ends up happening is you have to have a transitionary system. And Bitcoin is the only transitionary system plausible to be able to take us to the other side.
If I could add something onto that. So talking about the technology and then being able to speed up the velocity of money, I saw Peter Thiel talking yesterday, and he was showing the size of the gold market, and then he's showing the size of the equities markets, and then he was talking about Ethereum, and he said like Bitcoin is good for long-term store of value, but Ethereum might be better for velocity. And it's this old world thinking where gold was slow, and so maybe we need something like silver to be faster, or maybe we need to put a paper on top of it to be faster. But because of the technological revolution that we have it all built into one. So we have the savings technology, we have the velocity for the medium of exchange at the same time. And so I think by trying to break apart these different asset groups and say, well, we need different assets for these, again, it's a technological revolution where we have it all together. And I think that's a big piece.
All right, Preston.
I would just, one other thing, when Jeff said the term plausible, I immediately thought decentralized,
Yep.
right? Like that's the part that really kind of separates Bitcoin, because although it might appear like a lot of these other coins and things like that are decentralized, I think a lot of it's just the name alone, because when you really pull back, what makes these things decentralized? It's the power to run your own node.
Yep.
It's the power to enforce that protocol at a cost that is next to nothing. But here's what's important. It's next to nothing 10 years from now, 20 years from now, not just today.
Right.
Exactly.
Right? And that's the part that I think so few really kind of latch onto when they ask whether something's decentralized or not, is it decentralized 20 years from now? And if the answer is no, I'm sorry, I don't see a world where that's going to be the foundation of the future of finance.
Mm-hmm. Yep.
Yep.
Dr. Jeff. Japan has been able to avoid hyperinflation because they are a massive exporter and have a global economy to work with. But BlackRock CEO Larry Fink recently said that the war in Ukraine is the beginning of the end of globalization. So what happens to countries like Japan and their currencies if we start to deglobalize?
What happens? What happens to all fiat currencies over time? They go down to zero, right? If they can't export their inflation onto other countries as they have been doing, and this is true for any country, they have to deal with it themselves. The nature of government fiat currency is that it can be printed infinitely, right? You guys all know math. Hat tip to Greg Foss, who's listening to this right now.
Just math.
Right, it's just math, 11th grade math. If you can print something to infinity, the value of each individual unit goes down to zero over time. That's just math, it's guaranteed. This is what's gonna happen to the Japanese yen. It's going to happen to the euro. First, it's gonna happen to about 100 other currencies that are much smaller and weaker. They are going to zero, you guys, and people are going to understand the need and the importance of Bitcoin. They're going to start flocking into Bitcoin because they need to preserve their purchasing power. People are starting to get desperate for some sort of alternative to preserve their purchasing power, right? Bitcoin, because it's perfectly scarce mathematically, as long as there is continued adoption of Bitcoin, which of course there will be, because it's just simply better money. The value over time approaches infinity. That's just what it does. That's what we will experience throughout our lifetime. I'm not saying it's going to infinity, right? Infinity is a concept, not a number, but it will continue to go up. Michael Saylor is right. It's going to go up forever, Laura. Okay? So understand that. Thank you.
Well, and the reason why it goes
Well, hang on a second. I got to go to Jeff Booth here because there is something about the current macro picture that so many people miss, but what do you think should be the obvious thing we should focus on?
Peter Thiel yesterday talked about ESG and that it's a conspiracy around money printing. And I'm not going to talk on a specific conspiracy theory, but what I'd rather talk about is I'm involved in, I'm an investor in maybe hundreds of different early stage technology companies in the greening space. And what I can tell you is every one of them, I wouldn't be an investor unless they delivered value to society that reduced cost a staggering amount. And so when I see when I see these things that make our entire world better and are showing up, and by the way, the ones that don't work don't reach an economic calculation to provide value because then nobody uses it. It should be pretty obvious. And so all of these technologies that are coming, not here yet, not widely distributed yet, in food abundance, in energy abundance, that are coming, that all lower prices, how the hell do you let that happen? The only way that happens, you have to obfuscate that money by printing more money, and that printing more money to pretend we live in a growth cycle forever is the cause of all of the problems. So what you get from that is you realize ESG is unsolvable without Bitcoin. It is just it's unsolvable from the current system. Bitcoin is the only way to solve ESG. And I asked this question to Bill Gates. I asked this question to Al Gore. I asked this question on Twitter over a year and a half ago. 1 million views, not one plausible answer. And that tells you something. There is no answer from the existing system. So when you hear ESG, connect it to Bitcoin as the only way to solve that problem.
All right, we're going to do our knockout round, okay? So we're going around for the knockout here. I'm going to start with Mark. So on February 26th of this year, Mark, we cut Russia off from the SWIFT system, thus eroding trust around the world. How do we move forward in a world without trust?
That's the question. So trust is one of the most important ingredients, the most important ingredient. We have to have trust as a society. The thing with trust is that, trust can be eroded, and we've seen that happening all across the world. There's been polls that have been showing how far trust has been falling. But then at some point, you find that piece of information and trust is just killed. And I think we saw that all around the world. We see, money being inflated away, people losing their money. Obviously, Canada brought that front and center. We just saw very quickly that even if you donated a little bit of money to something that was perfectly legal at the time, you might be kicked out of the financial system. And it put the world on notice, like, oh, that money in my bank isn't really my money. We lost trust. There started to be a run on the Canadian banks. But then, to the point that you brought up, Trey, I believe trust finally got killed, right? It got assassinated on that day because there's 3 global superpowers in the world that have nuclear weapons. The rest of the nations are tier 2. And so if Russia, one of the superpowers with nukes, could have their bank accounts frozen, stolen, whatever you want to call that, what chance do other nations have? And of course, the answer is none. And so each nation now has to ask themselves, can I trust my savings in the banking system? The answer, of course, is no. And so then what's next? Well, I can hold gold, but I have to hold gold in my own safe because the UK just seized $2 billion worth of gold from Venezuela. If it's not in their own safe, not your keys, not your coin. And so all of a sudden we have this situation where trust has been killed. Nations can't trust each other. People can't trust the nations. And we're at this junction right now where I don't see how the world moves forward without trust. We get stuck in this situation where I can keep my gold in my own country. How do I verify it's real? China, of course, faked that they had real gold. It wasn't real gold. And then we end up in this like drug dealer movie scenario where it's like, give me the cash, no, give me, and that doesn't work. It doesn't work in a global environment. And it's almost like we might need a decentralized ledger that nobody could control if we could ever come up with something like that.
All right, rapid fire. Jeff, what are your closing thoughts?
Closing thoughts? Oh, man. You guys.
10 seconds.
Okay. Bank, checking, and savings account are where your money goes to die. Bonds, thank you. Bonds are return-free risk. We have a chance now to exchange our dollars for the greatest sound money, the greatest savings technology that has ever existed. Please, please, please don't trade Bitcoin Buy, hold, never sell, and you will do well, I promise.
Never.
All right.
We don't want more money. We want what we think more money will buy us. Money is an abstract concept for our time. Meaning, if you destroy the key aspect of money, if you manipulate the key aspect of money, you manipulate all of our time. And when you have manipulation in money, you must have misinformation everywhere in society. So the thing that everybody's looking through, news, is this thing is going to get worse and worse and worse. The existing system is going to get worse and worse and worse, is that misinformation. And you want to bite at the misinformation. Ukraine war, all of these things, you want to bite because it's so polarizing. COVID, and it sucks you in. Bitcoin is the opposite system. Hope, truth, better future, spend time there, forget this system's going to die anyways.
Preston, closing thoughts.
Buy Bitcoin and fall asleep for 5 years.
There you have it, folks. Our macro panel for the day. Hope you enjoyed it. Thank you very much.
Welcome back to the Bitcoin 2022 conference. I'm here at the Marathon News Desk, hosted by Bitcoin Magazine. If you're tuning in from YouTube, youtube.com/Bitcoin Magazine, please hit that like and subscribe button for that amazing Bitcoin and the macroeconomics landscape panel that we just heard.
Yeah.
Mega panel.
Yeah.
Greg Foss. Initial
panel.
reactions. I know you're dying to comment.
You know what? I mean, look, I love those guys. We speak the same language. We've managed risk as a career. Jeff Ross is, thank you for calling me out, by the way. He said it's just grade 11 math. Let's be honest. It's a little bit more than grade 11 math, but not much more. I want to hit on something that Preston said. Because I traded bonds, as probably everyone knows, but I have to be bingo Bitcoiner and say it again. So put that bingo square down when I say I've managed bonds for 30 years. Bonds are a horrible investment. Bonds are hitting new price lows today. But the price lows they're hitting only corresponds to a yield in the US 10-year of 2.71%. Preston mentioned that reported CPI is 8%. It was 7.9%. That means that you are earning a negative real return of 5% on your bonds. Sounds like a great investment, Ray Dalio. But at the end of the day, what I would say is the repricing in the bond market is continuing today. And there's a chance if the US 10-year bond does go to 5.5%, you will lose another 25% on the price of your bond portfolio. This last quarter is the first quarter in history that the US long bond was down more than 5%, and equities were also down 5%. There is no risk balancer left. Because traditionally, when equities went down, the flight to safety meant bond prices went up and yields went down. But since global yields have gone down to the US 10-year was under 1%, there was no more ability for yields to go down. People would have said negative returns. Those people had the glue bag on, okay? At the end of the day, a negative return in bonds means it's not an asset, it becomes a liability. You give somebody their money, you get less money back. Sounds like a great investment? Europeans are morons, okay? Europeans are fucking morons. But God bless Europe, okay? But sorry, before I forget, I don't mean that. I only mean it because that was their central bank policy to bring it to that level, okay? Here's what I know. Bonds are return-free risk. Once again, they are always called risk-free return. No. They got the message wrong. They are return-free risk. Bonds are a horrible investment right now.
Okay, so broad strokes to summarize, inflation has jumped reportedly at least 7.9% in the last year. We just closed the worst quarter in the American markets in 2 years. We're looking at a 2 and 10-year yield curve inversion, and these are red flags for a recession. How does Bitcoin fix this?
It's the best savings technology, right? If you're losing money, if the value of the dollar is dropping, why would you hold it? Why would you hold cash?
Beautiful.
Right? Why not just hold something that is appreciating in value, which is Bitcoin? And it's not like property or house where you have to maintain it, you have to like pay property taxes, you hold it, and just like, I don't know who it was, but they mentioned at the end, buy Bitcoin and just leave it
That
for
was
5 years
Preston.
and go to
That was,
sleep.
yeah, that's
Yeah,
Preston.
just fall
So,
asleep.
Yeah, that's
And-
your low time preference.
Yeah.
Beautifully said. Well
Yeah.
said.
Bitcoin's a mechanism for truth, like truth in signal of where people want to place their value. And, we have the CPI, which has been totally perverted since the 80s. It's been destroyed, and I encourage people to check out a website called Shadow Stats that will go through and show you what CPI used to be. It used to measure a constant standard of living, but then they made tweaks to it so that they could swap in different baskets of goods. They could account for improvements of things to basically say, like, you cannot, this is, your phone is twice as good, so, it technically costs half the price, is basically what they're getting at. But that's not out-of-pocket cost. So it's not accurately capturing
What is it, Ben?
inflation.
What is the real number?
Oh, it's well into double digits.
20%.
Yeah.
If you measured
Wow.
inflation using the 1980 formula, you're at 20% annualized.
That makes sense. Yeah.
There you have it, folks. And fundamentally, I think Bitcoin is recognized first as a store of value by most. So if you're feeling this inflation, if you're feeling these gas prices, if you're feeling your time devalued, it's being stolen from you by the government. Greg Foss here can't make it through the Bitcoin 2022 conference without getting pulled aside. He's such a great guy, man. So
Appreciate
you're a
being on
legend.
here, guys.
Yeah.
Pleasure meeting
You're
you.
awesome.
Ben
Thank you.
Sessions, rock and roll. Canadian truckers, rock and roll.
Yeah.
Yes.
Let's go.
Amen.
Yeah. We can. We're high energy here this morning. People are shuffling into the Bitcoin conference. It's exciting, guys. 25,000 plus Bitcoiners all together here.
It's beautiful.
Yeah.
Spreading
you
the
again.
gospel.
Yeah. Call out to David Bailey's mom, Callie.
Shout out Callie Bailey.